We are here today to announce that the Justice Department has secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1,300,000,000,000,000,000,000,000 market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about Bitcoin, green and ready to break out. And that's exactly where we need to look at what is going on in the market. We will look at Bitcoin ETFs. We will look at what China is doing, because China is pulling out the big financial gun, ready to send Bitcoin to the moon, and I think we are very, very close now. We are very close for this big breakout and starting the last leg. The green that we have seen now in the last couple of days is only leading up to this breakout. So make sure to stay tuned for that, and we are also going to talk a little bit about Ecomi tokenomics and so on, because there are a couple of news and some altcoins as well. So let's get into it. So good morning to each and every one of you. I hope you also have some coffees here. Got the VeChain mug here. Big sip of coffee necessary, guys. If you're not subscribed yet to this channel, then make sure to make this number go up by subscribing. Also, don't forget to leave a like, which is the most important thing here to push the video, and notifications on, obviously, so you can see whenever I upload the video or go live. It is, by the way, I forgot, it's a Freaky Friday. It's the end of the week. We still have today to pump a little bit more out of crypto, which is good. Very slow start though here in the chat, guys. Let me know if you're here. Trucking Hank says good morning. So Trucking Hank is here and ready. And also I want to thank my rare hodlers here all around me for supporting me all the time, being subscribed as paying member to this channel. So this is where you get an basically ad-free channel, in the sense that I'm not shilling any shitcoins and exchanges to you. So if you want to support that, make sure to become a rare hodler. Next mint available would be 43, I think. So yeah, that is that. So thanks to all rare hodlers, and let's jump right into what's going on. Obviously, we are also going to talk about fundamentals, not only about the charts, but it is undeniable that we are sitting here nice and tight at 65,257, just above resistance, and there is something in this chart. Hey, Jasper Frank, what's going on? Good to see you. There is something in this chart that is undeniably bullish, and it's not that we are sitting here green after a pretty big candle yesterday, which we called, by the way. No, it's the fact that not only have we put in a higher low here, but we also have now a higher high here, confirmed with a daily candle close. So that officially marks the trend reversal within this bull flag, right? So that is remarkable. Some people also call it a diamond pattern, like where you're basically coming in like this, and then you're coming out like this, and you're going like this, something like that. I'm not familiar with diamond pattern, whatever, but what I am familiar with is if we have a trend reversal on a medium scale after going downwards or in a downtrend, that's a pretty big deal. So what that means is this trend leads up to exactly the point 66,000 where we have said it would go. Once we were bouncing down here, we have said it, you guys remember, that we are going to expect, or that we are expecting this move up to 66k, which is then or which requires us to get a little bit more of a push to go out here. We have marked this somewhere around the beginning of one more week, right, where we said, okay, here we should be pumping. But obviously there are fundamentals that support this, and today I'm not going to go too much into this, like all this chart analysis as I did yesterday. So if you want to watch all this chart analysis, then yesterday is the best day for it. But just be aware that this bull flag that we're having is coming to an end, and it's the handle to this mega coffee cup, which is a good word or a good point where we need to take another sip, and should bring us all the way up to 120,000 if broken. And this is important, guys. We need confirmation. This is the weekly chart. We need a confirmation where we're basically open and closing above this level of 66,000 to really confirm this breakout and then set a new all-time high. That is what we need, and then we're going to fly off for several months. Everyone is going to have a good time. Everyone is going to make a lot of money if you are taking profits and you're not starting to marry your altcoins, which I should have done in the last cycle, which I didn't, but now I know. And here we are, and we're looking at economic data. So why did we move in a large green way yesterday? The reason is Jerome Powell, first of all, he spoke. I couldn't really find anything interesting, but apparently it was kind of dovish, looking to soft landing. And also here we see it, morning economic data, GDP, Q2 GDP came out in line. So we see that it's actually pretty bullish. We see here it's 3% quarter over quarter growth after previous 1.6. So that seems to be good, but it's in line with expectations. Q2 core PCE prices also in line with expectations. Consumer spending was a miss. Consumer spending, we find it here in this list, I guess. Where is it? Can't find it. Maybe, oh, there it is. It's the last one. So here we go. It's right here at the bottom. So it's actually 0.1% off. So it's a miss, but it's not too much of a miss. Jobless claims beat expectations. Continuing jobless claims, slight miss. Here we see it. It's actually up by a little bit, but it's not much. So it seems durable goods orders also beat expectations. So it seems that in the end, Jerome Powell and the entire US policy might get the soft landing that they always wanted, right? So this economic data looks good. It's not like that, the jobless claims and the unemployment rates are skyrocketing. It's a little bit more in the Eurozone that this is happening at the moment. There are big layoffs, especially in Germany. If you look at Volkswagen, for example, they are at least threatening to close 2 big factories. There are some companies that laid off 30,000 people in one company only, like total 120k layoffs in Germany. So that is pretty big. But then also we have institutions allocating money to Bitcoin, right? We see it here, institutions and also wealthy investors. We see it here on the total net inflow of the Bitcoin ETF, so US Bitcoin ETF inflows by the day, 6th consecutive positive day. And also you kind of see a where September 23rd was a little bit slow, but now it's in the hundreds of millions, and 365 million yesterday, also explaining why we had such a big pump, right? Yo, pro legendary sub boys, we're pumping, baby. Yeah, absolutely. We are moving. We're not really pumping yet. This is not really pumping yet. It's not the God candle mode that we have activated yet. But the moment that this look, we are even undecided here for today. We can look a little bit deeper. And I would argue there's a retest going on at the moment on top of this level. We might even go like this for the weekend, which would not be too bad, as we are just loading up for the next move, right? But yeah, and then also, let's talk about China. I have something interesting here for you guys. So this is super interesting. China is panicking. In fact, China is showing 2008-like signs as they are on the brink of a severe recession. Over the last 2 days, China has begun pandemic-level stimulus. So what does that tell us? The last time that we had pandemic-level stimulus during those lockdowns and whatever, we have seen a massive expansion out of Bitcoin. And obviously, it doesn't matter exactly. It doesn't matter who is pulling out the financial gun, but it's just adding to global liquidity. And as you know, on this channel, I am a big advocate for global liquidity being the principal price driver for Bitcoin, right? And this plays right into it. Pandemic level status sounds like there are some stimuli coming into the Chinese population that is going to drive heavily the economy up. But what does it? People always think that when global liquidity is expanding, or when liquidity is expanding in a country like China, where people can't really on mainland buy Bitcoin, that means that this liquidity is not going to hit Bitcoin because it's allocated to other markets. That's not entirely true. Think of the following. So people can't buy Bitcoin, so they buy stocks. But it's also possible around the rest of the world to buy Chinese stocks. So Chinese stocks go up with that stimulus in the economy, but traders and investors in Europe and in US, they are taking profits out of that because their stocks went higher and can roll that into Bitcoin. And that is how this liquidity, doesn't matter where it's coming from, hits Bitcoin anyways, no matter if in that country Bitcoin is banned or not. Because let's say I have an Alibaba stock and it goes up 10% and I shave off some profits and roll it into Bitcoin, right? So then technically that liquidity that made Alibaba stock go up went to me through the profit and into Bitcoin, because I am the degen here and I can buy Bitcoin, right? So that is how it's actually happening. By the way, it's not full screen. There we go. And it's sorry, that was the Bitcoin ETF, but we come for that later. And we see it here also in the liquidity expansion. I have that on the thumbnail because it's actually very important, right? So we see it here that now this cycle for China has begun with a massive uptick. It's not that slight, right? Like it was here or here. No, it's a massive uptick, and we will have to go quite some way over the next, I would say, 1.5, maybe 2 years until this tops out. And this is interesting because the US, for example, is still, they are doing it, but they are still far away from having the big financial gun out. And they have to, because they are paying $3 billion of interest every day, so they will have to print at least that money to service the interest. They will have to refinance, so they will have to refinance 35 trillion US dollars, which is more than a third of the current global liquidity. So also the US is going to have to do such measures in the end, right? So it's definitely an interesting time. Now, the consequence of this is here we see it, Asian markets, obviously all of them green. And then you have here Hong Kong stocks set for best week since 1998. China since 2008 on stimulus impact, right? So this is the news. Chinese markets are set for the best week. Mainland CSI 300 is poised for nearly 15% rally. 15%. You guys know what that would mean in a stock market? 15% rally in such a market is like it's the market is trading like an altcoin over there now. It's like literally like a top 50 altcoin. Sven says, oh, hey, MVE, what's going on? Sven says, lol, I'm hard in Alibaba and indeed getting ready to cash in, but still down. Yeah, so, I mean, obviously there was a phase where I think Alibaba was up quite a bit. I don't know if it was the phase when the Alibaba CEO got arrested or whatever. But, yeah, some people are still down. But and then also this whole Chinese trade war thing going on. Between US and China. But yeah, there you have it, right? If someone bought the dip on Alibaba and is now up like that, it's exactly what I said, right? So China's central bank cut its 7-day reverse purchase rate to 1.5% from 1.7%, as well as lowered the reserve requirement ratio for banks by 50 basis points and so on. So China is completely quantitative easing and fueling the market. Now here it's interesting. I want to show this video to you because this guy is investing in China and he's showing a little bit of an investment mentality that also fits our what we do in crypto, right? So let's listen to this together quickly.
With the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things we've seen are that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba? Or are you talking JD, Baidu, PDB,
everything.
the two Chinese ETFs? Everything China.
ETF, how we do futures, right? Everything.
He's like, I had a risk limit, but when I saw how bullish the market turns, I just threw it out of the window and I bought everything. It's like us Degens. If we were at these interviews, it's like, oh, you're comfortable now, Bitcoin going to 120K, what altcoins are you buying? It's like everything. Like, do you buy meme coins? Everything. So he has the right mindset here, and it shows you, like, once the tide is bullish, like some of these big investors, they go for everything. But let's continue to listen because it gets even better.
Listen, a long time ago, in 2010, I think I said everything.
And you I remember when you said everything.
And you know what's good?
You were right.
Everything. Okay? So if they this is incredible stuff for that place, okay? So it's everything. Now, I would love to see a pullback, okay? Because I will then, my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12. It's double.
20 to 24%. So
I'm not going to say what it is.
Is the limit 25?
I will have another newfound limit, okay, in a pullback, okay?
Again, like us crypto guys, it's like once it's pumping, it's like it would be great to have a pullback. I would go all in. So his newfound limit, he would double it if there is a pullback. So it's like he is like an altcoin trader. He's like an altcoin investor, whatever.
If I see these absolutely be implemented, because again, you can look at these names. And you're talking about single-digit PE multiples with double-digit growth.
But you think there's
and wait a second. Yeah. This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash, and that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you.
They're asking, did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? You know, I'm sitting here in a suit. My counter bet is that I don't care.
This is the best ever. It's like when people ask me, like, what if Bitcoin goes to zero or whatever, like your coin, like VeChain or so. It's like, my counter risk, I don't care. This is the right mentality. I mean, you have to have your risk limits. You shouldn't go to the bank, take out a huge loan that you maybe cannot service and dump it into like baby Doge whale coin or whatever, right? But there is a certain risk. I would like, what is a country? Not risk aversion, like a risk inclination to risk that you should have in such an environment, right? Because it's just the upside. It's an asymmetric opportunity, right? Also for him, because all signs are on bullish, quantitative easing, global liquidity expanding, and so on. And he's like leaning toward more risk because it would be stupid to not be more risky in such an environment, right? And there's probably also the other side where he would see 5 signs and he would like, okay, let's de-risk. It could pump more, but let's de-risk. So it's really good to see also that hedge fund managers, they are not too far away from our mindset. They have way better tools, obviously, than we have. Like you, for example, like this guy probably spends millions on market analysis and also trading bots and I don't know what, and trading fee reduction and I don't know what. You guys have Patient Hodler live stream, right? That's your you have to watch 2 ads or maybe donate $5. That's your tool, right? And but not financial advice, obviously. But these guys are paying to actually get financial advice. Here's not financial advice. Here's only entertainment. But the bottom line is that that there's something similar going on, and they are seeing the signs just as we are seeing the signs, while everyone else is screaming panic, right? So as we saw, Kobayashi letter, for example, is pretty biased to the downside at the moment, at least for many economies, just because the economies are showing signs of it's going to shit if they don't do something. But they're doing something. I think that the cycle has moved in a way where all these forecast tools in the economy, they flash the signs so early that central banks are already taking measures before the crisis even hits. So this is super interesting because, for example, if you take for example the S&P 500, right? And I can show it inside of the S&P 500. If you show the S&P 500 and you see like you look at all these rate cuts and crises. So here we see the crisis has begun for many months already. It's like going down, and the central bank was looking at what are we going to do as like, oh, let's rate cut, but it was already too late, right? So the whole thing went down the roller coaster. Here is like, oh, crisis signs are flashing. What do we do? Rate cut. It was too late. Crash, right? Here was, okay, the rate cut was earlier and then it went up. But here it was so short. Look, the crash is there, but it was so short-lived. It got printed away in the matter of a couple of months, right? So flash crash, rate cut, couple of months, bam, we're back at all-time highs. And everyone was like, how is this possible? How is this possible? We just had the entire economy locked down for 6 months worldwide. Biggest ports like Shenzhen and so on are constantly closing down. Restaurants are getting money, but they are not servicing. all this degeneracy that we almost forgot. Like people got helicopter money for not being productive, and we're back at all-time highs. How is this possible, right? Maybe now. I mean, you see this here also, like recession, like big recession signs, whatever, and we are at all-time highs, right? So maybe this was it, right? Maybe this and this was it. And it's just got printed into oblivion. So this is, this might be it. This might be the way, the new strategy all around the world. And what's even worse is that now the central banks, so to say, are colluding, where basically central bank people are traveling to other central banks to align rate cut and hike strategies like they did with Japan, right? As the old Stu is here. What's up, Stu? How's the gold price going? That was really nice. So Stu came on here, predicted the $8,000 gold, and now gold is rallying. So I really love to see that, because obviously it's also bullish for Bitcoin. But Paul's Outback said, I bought $100 of bread. Congratulations. Stu says, as the old saying goes, have cash on the side, and when blood on the street, swoop like there is no tomorrow. It's sad, but it's a fact. Time immemorial. Yeah, I think so. I think that people, first of all, people forget like how situations were. I think a reminder on how financial conditions were at certain times are really good, right? I think you are absolutely right. And I think the best time to build a cash pile is when your investments are rallying, because then you don't have to allocate to them. You can take what your other cash flows are providing and start piling up. And then also at some point you can take out of your investments and increase this cash pile, right? At the moment, we heard that a lot of companies are sitting still in cash. The guy that we're just here, what was the name? That asset manager there. Here, David Tepper. He is betting on basically that all these Chinese these Chinese companies all have to move into their own stocks, basically. So what's the reason? Because if China is debasing the currency so extreme, on such an extreme basis like they are intending or are actually doing right now, it forces everyone to move to other assets, which is basically once the US is starting that, is when the DXY is going to crash, right? So basically the Chinese Y, whatever the ticker would be, is basically crashing. So everyone is like, what can we move into, right? And for many, it's gold, right? So we can actually, now I erased the chat, that was stupid, but let's go. We can actually see this here. Like gold is just not, it's just not stopping. I mean, it's a little bit, but it has printed a new all-time high already again, like I think yesterday, right? So it's 2686 or something like that. By the way, Stu, just for FYI, the target is still here, but it needs to be moved up more. But and I also have some gramsies of gold. I also have. I intend to at some point sell that and and roll it into Bitcoin. But yeah. Warren Buffett has approximately 100 billion on the side, as many big players. Interesting to watch. I think yes. The question is, what is the playbook here? So we saw that he took profit out of Apple and also Bank of America. The question is, what is the play? I think it's going to really go to nuclear if we see this money being allocated again. Because in the end, it doesn't really matter for him. Because in the end, he's also taking very long-term trades, right? Even though he's like the investor, but he's like taking long-term trades. So maybe he doesn't have, many people think he needs a crash or something like that, right? So many people think he needs a big pullback to enter with this money, but actually he doesn't. He just needs the conditions where he knows that things are going many more years to the upside, and then allocate right that to the upside and take profits again, right? So this is, I think people always think like, okay, Warren Buffett moves half of his portfolio because he's anticipating this, right? This is not the case. It's not necessary. He could also be anticipating this and then a continuation, and he like moves in here. He just wants to, probably what I could expect is, or what I would expect is that he's waiting for rates to go near zero and then he's going in, right? Because then he knows that rates will stay flat. It's a guaranteed trade where markets are going up, I think. Hold gold short-term boom. Yeah, exactly. So this is, I bought my gold a couple of years ago, so so there's no hurry, right? But anyways, that is that. And let's see. I had some, yeah. So we are now at the moment at the best performing September of all times in Bitcoin. This is the best September of all times. We are sitting at roughly 10%. The best September that we had before was 6%, and that was 2016. Every time that we have a green September, also October, November, and December are green. That has never been different. We will see it if there will be happening something different when we are coming in October. We only have 4 days left, and then we're going into October, which is crazy, right? Private info said, I hodled pop cans for years and the government doubled the deposit. Win. Yeah. Congratulations on this trade. Nice. Anyways, I think that this is a good development overall, right? And then also, again, going to liquidity, I like this statement here from Bitcoin Therapist. US national debt is 35.4 trillion, constantly increasing. That's equivalent of 545 million Bitcoin. This is 26x larger than the total issuance of Bitcoin. We are going so much higher. So in other words, if the US government would take the equivalent amount of their debt, roll it into Bitcoin, this would be a 30x or something, because you also have to see that some of this Bitcoin is lost or doesn't move and whatever. It would be a 30x just out of that allocation. Obviously, this money is not going to hit Bitcoin at once, and it's not all hitting Bitcoin and so on. But the stimulus that is coming out of that is eventually flowing into Bitcoin, as people understand that once they are getting rid of the interest rates on that and and refinancing the debt, their currency gets debased. The money printer will continue to print money and will devalue what regular people are putting in workforce. This is the crazy stuff. If you can't buy the same groceries the next month as you did before, that means that your productivity that you're giving the market is not giving the same return anymore, right? Unless you get a raise, but a raise will be priced into the end product of whatever company you are working for, moving over the time also these prices up, right? So in the end, you have this spiral of debasement, and who is getting wrecked is everyone who earns money, spends money, and doesn't invest on the side. These people get wrecked. Yeah. Do you think left translated short cycle due to recession signals, or normal bull cycle 500 plus days from halving? I think normal bull cycle. I think that the left translation has been corrected out through our bull flag. I think normal bull cycle for now. I mean, we can't say for sure, never can say for sure. If we would go into like WW3, right, World War, obviously that would maybe even end. No, actually, maybe let's correct that. If we would have such a thing, and it's not affecting the whole world. It could also like make it even more massive as people like go into like flight to safety, right? And central banks would print immense amounts of money, leading into a massive bubble that would drive Bitcoin to I don't know where. The funny thing is that people, it's really funny that people don't. I can show you. People don't look at Bitcoin in other currencies, right? But there's a BTC against TRY. Let's take BTC against TRY spot, right? Okay, so there's not much chart, but maybe there's another one. So Turkish lira, right? Okay, so it looks different, right? It looks different from our chart, right? Because look, previous all-time high. And this is where it's like you have, because if you take the Turkish lira as their individual market, the debasement has been so massive that this is how the Bitcoin price moved. It's just a series of, right? There's not really, it's not stopping. It's not really stopping. And had you been in the currency, look how much down you would be, right? I don't know if we can put the reverse here, but basically it would be this, right? This this would be everyone who would work, and this goes also to your to your cycle thing, right? Everyone who works like would be down. I don't know how many, this shows thousands of percent now because it's inverted, but you basically have to see that while everyone who has Bitcoin in that market preserved purchasing power, whereas everyone else, look at the performance here over the years, that's a 7x, while we were in a bear market and are barely break even. Yeah. Currencies are massive to trade. Also, like, I mean, this, and then people are saying, Bitcoin is not a hedge against inflation. Yeah? Or, what else is here? Or it's like crypto savvy and all these bears. It's like, it's way better to be in currency than in Bitcoin. Yeah, tell that to people in Turkey or in Argentina, right? If they were in currency, they would be sitting here with their couple of lira, whereas everyone else with Bitcoin is still able to buy stuff, right? So this is crazy. I don't know, man. I've not been to Turkey. I don't know how the situation is, but I mean, this is a shit show, right? This is literally a shit show, because then also like TA for them is like, don't even bother with previous all-time high whatever, right? They have long time broken this. It's just going nuclear. It's just going up. And this is what happens if governments debase the currency, right? Yeah, Brazilian real is also, yeah, it's very volatile. It's great to trade. I've lived in Brazil for several years. We obviously have family ties there and so on. So we're dealing with that constantly. Like you look at the Brazilian real in comparison to the euro, for example. It's just massive. The trade is massive. There are certain upticks where you're like, okay, you have to buy certain things over there now in this conversion from euro to real. It's real. Example, Thai baht is up on US dollar 14%, 70 days. No bueno, incoming shitstorm. Yeah, absolutely. Whenever this happens, there's shitstorm coming. Yeah, it is what it is. And it's not nice, but it is what it is. Let's see, I was here. So overall, whatever that is, your currency is expanding, debasing your. If you hold currency, you're going to zero. Doesn't matter if it's US dollar, euro, or Turkish lira, or whatever, Argentinian peso. It's going to zero over time. And that means just calculate the debt, but also the entire M2, and what would that do with Bitcoin, right? And that's where you Bitcoin doesn't only preserve wealth because it isn't at this maturity. Bitcoin also generates wealth because all of the countries are going into that, and it's not adopted yet fully, right? After adoption, it would probably just appreciate what. After full adoption, I mean, right? It would just appreciate whatever countries are printing in terms of global liquidity, and then go to like what 10, 12% return annual basis or whatever, instead of 40 or 50, right? Could you give a brief of Shiba scenario? Shiba, Moon. Like if we break out, it all comes down to Bitcoin. What's the scenario? Moon. Meme coins have been doing well, especially the bigger ones. I don't know what Shiba is doing besides that, but I don't know. Let's see. SHIB. Let's see the SHIB. SHIB to Shiba Inu to US dollar. So I don't know. What do we have here? It's not much chart. We have been quite up, man. That was some nice pump there. But yeah, higher high. What do you want me to say? Probably you're going to even take out this because people are degenerates, right? Maybe there's a longer chart somewhere. Yeah, there you go. I mean, yeah, it will pump. Let's just leave it at that. It will pump, right? Probably. What is that? What is the previous one here? Couple of X's for sure. Something like that. Yeah. Stu says, good to see you do macro, not just crypto, because it's all related. Yeah, I think in the cycle, and this was very important to me, which is why I'm pulling up the gold chart and Bitcoin dominance and S&P 500 and stuff like that, is because ultimately it all comes down to what the macro does, which influences how the macro markets are moving, which influences how, and we can take gold as a reference, which influences ultimately this small niche of Bitcoin and crypto, right? And I think, yes, the big multiples are there, but what's going to happen will be first visible in that, and then we see it in Bitcoin. And like the crypto market in itself is like a miniature macro market, because you see what Bitcoin does and all the other cryptocurrencies or crypto tokens, whatever, are following this move. There's very rarely a time where Bitcoin is just in a broader bear market and some coin is just going nuclear. It's just not happening, right? So I like to look at that. And once we have that all confirmed and the markets went ballistic and global liquidity drove the markets and Bitcoin is going in the direction of all-time high, we can take our focus and move to inside crypto to the smaller coins and see what's going to happen on that basis, right? We want to be in the coins, obviously, to make the returns, but we will not find our answers in the coins. Yet there are very big opportunities, very risky, but big opportunities inside of crypto in these coins then. And then we also need to look again outside to see when is the party stopping, when's the music stopping, and everyone will find a chair and there are people going to be left without a chair, right? So we're trying to get an edge over this, right? But I think, Stu, you're agreeing. Look at that. For example, gold. Gold piled on, I don't know, 5 trillion or so since we looked at it, right? Market cap. So gold is sitting just under 20 trillion. That says something. It says big players, even central banks in this market, are loading up on gold. Otherwise, where is the trillions coming from? Why are they doing that? Because it's a store of value that central banks can buy at the moment. I think in the future, after maybe 2 cycles of adoption, we will also, maybe in the next cycle, but not this cycle, we will also see like bigger central banks putting a percentage into Bitcoin, just because it's unstoppable already. We are sitting only at 1.2 trillion. Let that sink in. If we were just to pile on half of what gold piled on, just half, on top, not going to that market cap, just on top, we would put another 2.5 trillion on. This would this would 3x Bitcoin, right? It's crazy. Not saying that's going to happen, but I think Bitcoin will add another 1 point something trillion. Very likely out of that just global stimulus. I tell newbies, Stu says, I tell newbies who have no idea, just think of a whole new stock exchange. I find that a good entry point to educate, then I get heavy. Yeah, exactly. It is. It is. And also, I think many newbies in that sense, they have to, oh, hey, Chris Thomas, what is going on? Good to see you. I think some of the newbies, first of all, if you talk to people, sometimes you have to find out where they are, because some don't even understand that their paper money doesn't have an actual worth, and that they're getting that it's getting printed out of their pocket. They're just not there yet mentally. They don't understand, and it's mind blowing, because who does not understand this after 2019 and 20, especially 2020 and 2021? Yeah, I wouldn't say get help, because that's what we are here for, right? But it's very difficult to understand how you cannot understand this with the price increases that have been visible all across the world, right? And some people might need another one, and some people will never get it until financial disaster, which at some point will happen, right? But as long as they can play this global liquidity fiddle and just expand whenever there is a crisis, they will just continue as it is, right? But you see it, 50 years ago or 60 years ago, my grandparents, you just worked a couple of months and you were able to build a house with 3-story house, big garden to plant your stuff, garage, car, couple of salaries, right? So your today is like 2 doctors have only 1 kid because it's unaffordable. Yeah, not every doctor is on Porsche anymore. Like there was also a saying from, I think it was from Porsche himself. He was like, every Porsche employee has to be able to afford a Porsche or drive a Porsche. It's not the case anymore, right? Yeah, when the Porsche employees have to come to work with Fiat Punto, then shit's hitting the fan. But yeah, most have no idea of Fiat, but we are fortunate to be here now. It's what is super important in my opinion. I can only recommend, I don't know if you have to do ancestry. I personally like to do that, because it's just for me experiencing history from the perspective of the little man, right? So you're looking at your ancestors, 1850, you're reading up on a tiny village in Germany, and you see this and that happened in that time, so they probably were affected, and you're trying to make the ties. If you have the chance, talk to your grandparents, ask them what the prices were, how they built their house, what their first investments were, how they were dealing with money, just to get an idea how circumstances were 1950, maybe in 45 after World War, if you can still ask them, right? Maybe they are after war child generation, whatever, or how it was in the 60s and so on. Ask them. It's sometimes it just blows your mind, right? What really happened in that time. It's never wrong to ask how things were in that time, I would say, because you can learn from history, and it's actually this is also the reason why many people will go into financial trap, because they just don't know. Like there's no one alive basically anymore that has a vivid memory of 1928 big depression, Great Depression, right? 1928, in 4 years this will be 100 years ago, so that would mean people would be 100 if they were born in 28. So yes, there is no one that was 18 years old or 20 years old already working that can tell us about the circumstances anymore and how it was and what people said and how people thought and so on. So collective memory, gone. Yeah? So it's already gone by now. So it's very likely that exactly at this time when this is gone, the mistakes will repeat. Yeah? And hopefully not another mistake, which is going into World War. But anyways, every NVIDIA employee can own a Porsche. Yeah, maybe Porsche. Yeah. Spell check. Yeah, exactly. But for everyone who thinks that we are not aligned, here it is. This is where we are. Right? We're actually, according to this, we're still a little bit left translated. Not much, by a couple of days only. But you see here, like rally, we're premature still. And everyone's like, oh, this bull flag is taking way too long. Okay. After seeing the previous cycle where we dipped down to I don't know where into oblivion, we still had a bull market. Yeah. The victors write the history. Yeah, it's true. Financial education should be a mandatory subject in high schools. Yeah, but they don't want that. As long as high schools are driven by governments, they are very fine with everyone not knowing what they're getting into. That's very, very much what they want. Yeah. Let's talk quickly. Let's look at the market. Let's see what's popping. Let's popping. Yeah. Let's and what's popping. Okay, here we see it. Top 100. SHIB is up 35%, by the way. So this is why the guy asked about SHIB. So meme coins are flying. Floki 20%, SHIB 35%. Aero is up 50%. Hex 40%. Say 40%. Bonk 22%. So everything's flying. Stark is up 21%. So yeah, things are popping. Shiba, please, man. I looked at Shiba. So what do you want? It's going up. It will go up. It has a big community. It will go up. Don't worry. No worries about SHIB. By the way, let's look at also. This is something we didn't look at since 1,000 years. So let's see how we are doing. This is interesting, right? Because this is let's just give it a refresh. A big refresh. Here we go. So this is blue is Bitcoin, red is Ethereum as a mark. Maybe we should look for Solana instead, so we know what altcoins are represented by, because Ethereum gets a little bit neglected. Let's look for Solana. Yeah, Solana in general as a word. Oh, there we go. Not much different. It's also two. So this is crazy. So the search volume for Bitcoin had a small uptick in the last week, but now is still at 18. 18 is bear market territory from retail interest. Keep that in mind. It's just, there were values at 16, we're at 18. Retail is not in this market. This market is completely driven by institutional investors, wealthy investors, people that are already in crypto, and so on. Solana, search volume 2, right? Solana had in the last bull run a search volume of 5. Okay, so we're not even at half that search volume. We can expect more for that. NFTs are sitting at 1. NFTs in the last bull run started only to take off to 2, 4, 7 when the top was already in. Okay, so that is how it works. Yeah, so we see here altcoins. Altcoins really were firing here. We see it here, like biggest altcoins were when the top was already in, which is why we're looking at macro, right? This is exactly the reason why. But we see it here, bear market territory still from search volumes. All the retail is coming still. They are not here because retail is still retail is now going to refinance their debt with the rate cuts. It will take a couple of months, and then they will come in. Hedera, Doge, Space Ape meme token on Hedera. Doge going crazy. Okay. And when analysis, I learn how is to read graphics. I will not teach this. I will just do my own analysis. So unfortunately, that's not what I do. I don't teach you how to read this. Right? Many people. I'm just telling you what I see, right? This is what I do. We are at the point where it gets a little bit depressing now, because we are looking at the Ecomi, yeah, as always, because there's a large community here for Ecomi. So Ecomi has all-time lows. Yeah, it lost the next level of support. We're still in price discovery. We are moving down this wedge. We are at 0.0036 for Ecomi. Skipping over TSE is wild, if you say so. Guys, by the way, I didn't ask the whole stream for it. 41 people here also shilling your coins, no problem at all. But please smash up the like button. I don't ask much for it, but please support me with the like. We have 41 people. It would really, really help me here. So yeah, we are waiting for something for Ecomi, but actually we got something. It just wasn't able to pump the price. So Ecomi came out with this here. To even the most seasoned crypto user, blockchain and cryptocurrency can be a minefield to navigate. The OMI token is no exception. Several factors affecting tracking and accurate reporting of the token. Breaking it down in this article. Okay, so here we go. Liked and sub, thank you very much, and welcome to the channel. So here we see it. While many in the community are aware that 700 billion tokens were minted during creation, there are several considerations affecting circulating supply. Okay, so here it's basically a breakdown of what we are discussing since 3 years on this channel. The fully diluted maximum circulating supply of OMI token at the time of writing is 310 billion tokens, which is actually more than there's actually in the circulating supply. While the number of OMI tokens in circulating supply can never exceed this number, due to tokens which will permanently will be removed or are already removed from the circulating supply via OMI utilities, this number may decrease over time. This number will decrease over time because it's being implemented in Stacker at the moment. The question here is, before you jump on my throat, the question here is for this token, how much OMI will be removed, right? What is the buyer's fee in the end, and so on, right? So of the initial 750 billion tokens created, 40 billions were used to precede the Vault wallet. 300 billion tokens were used to precede the Reserve wallet. So this all got removed, right now. So the totality of the 340 billion tokens were permanently removed from the Vault and Reserve wallet in September 24, allowing for more accurate tracking of the token. So they can use this now. So the fully diluted maximum supply is this, but the current circulating supply for OMI is 270 billion tokens, right? Which is still a lot, okay? So here we have basically the breakdown. So burned Go OMI, Go Chain. So this was when OMI was on Go Chain. This was the smart contract accident, the 97 billion. So, and then we have here another reduction, which is 32 billion is in ERC20 OMI business development wallet, and then there's another 70 billion still on Go Chain, which never has been migrated. So the full circulating supply that is actually hitting the market at the moment is 270. But remember, also the business development wallet can technically be used until they move also this into the Burn wallet. And this is the question, will they do that or won't they do it, right? So yeah, time-locked OMI contract, blah, blah, blah. So you can read this all up. what I like about this is that they provide a transparency here about how this token is distributed, right? So while the inadvertent token lockup accounts for vast majority of these tokens, an additional 26 billion were permanently removed when tokens resided on GoChain. So that is the breakdown here. What we see is basically that the data that is reflected on CoinMarketCap is not 100% accurate. So we will see how this plays out in the end, right? But I think it's good that they communicate this now. The big problem, or the big challenge here will be that the token burn gets people excited, right? So this is, and that the token overall in its performance shows some strength, right? We need some pump here. So if you buy Ecomi now, which is completely up to you and no recommendation here, I'm not buying at the moment because I'm just looking at this price discovery and where it's going. But if you're buying right now, you buy at almost all-time lows. But keep always in mind that if you, for example, look here on CoinLore Ecomi chart, that there were still people that at the initial investment round got their tokens way lower. You see here quadruple zeros 3, for example, right? Which is 10x below, from there it would be a 10x to the price right now. So that means there are people in this token with big bags that still have 10x the amount of where we are, can still sell right now at 10x the profit, with a 10x profit basically, right? So it's not a bad deal for them to sell. This is not reflected in any trading view charts because this was before Ecomi took off massively, right? So now the question is, will it find its bottom and when, right? And this is price discovery, and we're looking at it constantly and so on. We can also look at it like here, not too many lines. But what we want to see is that there is some kind of a bottom formation, or that we are coming back up. We can also jump start, but we really need to take out this range up here at 001 more or less, and really take this out on a weekly or even monthly basis, which would be it's only a 2 to 3x to reverse trend, right? That's not the problem. The problem is it needs a basis to happen, right? So that it doesn't just go down. Like we really need a trend reversal here. So the question is, will this wedge maybe play out? So this would be the first indication would to stop the short-term downtrend. The second indication would be the break of the wedge and a break of this newly created mega strong overhead resistance. And then the third indication would be the break of this whale range, right? And if we have that, then we can say, okay, now Ecomi is in a bull market. Until then, not happening, right? And what do we need for it? Once again, for everyone who wasn't here in the last months, we need a clear roadmap from the Veve team. We need exchanges where the US can buy the coin. We need to cater to Web3 with the integration of OMI to those NFTs. And then on the other side, we need the full OMI to NFT launch on Stacker and burns that are actually giving you a calculation of if this continues that way in 1 year, the whole circulating supply is gone. This would ultimately drive the price, right? And is it impossible? No, it's not impossible. But we also saw that the team and everyone was kind of slow on things, right? So we're looking at chart and trying to get excited, but so far no excitement for us. Yeah, that is basically, unfortunately, the reality. So interestingly, I want to close this with some excitement, and it's not about Veve and Ecomi, just don't get me wrong here, but how amazing would how amazing would an NFT be that looks like this and that you can actually use in a game? This looks freaking amazing. 3D like holographic. This triggers all my Pokemon senses, right? This massively triggers my Pokemon senses here. I really want to see stuff like that on Veve, but now it's coming out as a TCG that seems to have no NFT integration. It's coming out, I think, end of 30th of October or something like that. So October, and then also this Pokemon TCG coming out, I would definitely get it, and I will definitely be opening packs. Maybe there is a way to have this minted in the future, but we don't have it yet. Now, on that note, guys, please smash up the like button. Let me know in the comments below what you think about this. And also, like if you watch this afterwards, otherwise you have to chat. Subscribe to the channel, notifications on. I hope you enjoyed today's stream. I see you back in the next stream, but also stay tuned for potential videos on this weekend. And wherever you are on the world, have this great morning, evening, day, night, or